Wow, guys, do we have a jam-packed video to get into today? We are going to talk about Executive Order 14032 and why that could be a big deal for AMC stock in the month of June. This executive order alone did help to cause the last two major rallies in AMC stock that we have seen in the past, just within days of this executive order being reinstated in the past year and a half. So I think it's very interesting, to say the least, and I think it could be very interesting this time around again. Now, on top of that, we're going to talk about what happened today with the markets, what happened today with AMC stock, but also I do want to talk about Michael Burry's new 13F filing that did come out that shows an Apple short of about $36 million. So let's dive into all of this key information. If you guys find value out of this video, hit that like button, subscribe to the channel, source your comments, questions, or concerns, and make sure to check out the sponsor of this video, which is Moomoo. Sign up, deposit $100, get 3 free stocks, as well as join a great platform. If you are an active trader, that is the place to be, with much better fills than Robinhood or Webull, and they also give you free short interest data, a free news wire, and you can also source ideas and information with other like-minded traders, all in the brokerage. So let's dive into all this key information. If you guys want to come trade with me as well, live in real time, link down below in the pinned comment to do so for that one. But now let's dive straight into exactly what this executive order is and how important it could be. So it says Executive Order 14032 could be a big deal for AMC stock. It goes on to say Biden's Executive Order 14032 replaced Trump's Executive Order 13959 last year. Executive Order 13959 prohibited financial institutions to use Chinese securities as collateral momentarily. This propped up margin calls because of the large exposure our financial institutions have to Chinese securities. When these securities were no longer accepted as collateral on January 27th, 2021, AMC stock surged. Interesting, huh? We actually hit the high January 28th, the day after. Very interesting timing there. It does go on to say, the order was shortly moved to May 27th, 2021, where AMC stock had its second surge, reaching an all-time high of $72 per share only a few days after. Wasn't the top on AMC stock like June 2nd, June 3rd? Let's go ahead and check back and refresh our memories here. So the peak was June 2nd. The day this was actually put into place was May 27th. And what happened with AMC stock May 27th? Well, you've seen a 35.58% rally that day. Next day, down 1.51%. And then we were up 22.66%. And then we went up 95.22%. This really does start to hurt the hedge funds that have to collateralize their other long positions, especially because a lot of hedge funds right now have been loading up and buying the dip in massive ways in a lot of Chinese stocks, specifically Alibaba being one of the biggest ones. Even Bridgewater just bought about 8 million more shares of Alibaba, and a lot of large players in financial markets continue to buy into Chinese stocks. So on top of already stretched liquidity, now it's going to get even more stretched because you will not be able to actually use your Chinese securities as collateral. Now, let's continue on with this article. It says Biden then shortly passed Executive Order 14032, which gave institutions their collateral back for 365 days on June 2nd, 2021. Well, those 365 days are coming to an end, and it seems June of 2022 could be a big month for AMC stock. And that is where the article leaves off. And I think the timing of this shows the importance of this in the grand scope of what potentially could happen to AMC stock. You got to look at history. The last 2 times this actually happened, the stock ran up dramatically. So it would not surprise me to see something along the same lines, but potentially much larger, to actually happen again. Because you guys got to think about it. Over the past year, we've had COVID. We've had massive amounts of money printing. The stock market was doing great this whole time, and look what happened then. Now, I'm very much inclined to believe that you would see a lot less capital able to be allocated to margin calls, that you would potentially see a lot of people be forced out of their short positions due to this executive order. But at the same time, liquidity is super stretched at the moment. Just servicing these margin calls is hard enough right now for these hedge funds, but add this on top of it and you could set up for a very good June 2022. We'll wait and see. Who knows? Anything can happen. Wouldn't surprise me to see the stock go down during that time. But history is very clear on what tends to happen around these specific executive orders on Chinese securities, or using Chinese securities as collateral. Now let's take a look at this Michael Burry. If you guys don't know, 13F filing. If you guys don't know who Michael Burry is, he predicted the housing market crash about 2 years before it ever happened. He is why The Big Short is a movie. He's essentially the main character that risked the whole firm and then ended up posting like a 417% return for the whole fund, and then closed out the fund the very next day, paid everybody, and ended the fund. Now, he is short Apple, and that's his, it looks like his only real short position as of right now, at least using puts, and he did short about 36,000 shares, which times that by 1,000, and that comes out to a $36 million short position. Now he's probably obviously up on this, but I think it goes to show that kind of my theory might have a little bit more credibility to it. Now obviously I'm not Michael Burry, but we've talked about Apple a lot on this channel, and Apple is a main key to the markets, and whatever happens to Apple tends to happen to the markets, and there's obviously going to be a lot of demand destruction. There's obviously going to be a lot less demand for Apple this year, which will help further constrain liquidity, because if you are a hedge fund, you have to be invested in Apple by and large. Because why is that? Well, if your hedge fund is, let's say, down 50% right now, but the S&P is only down 16%, that raises a lot of red flags, and a lot of people at least want to follow what the benchmark indexes do, because your clients are going to say, hey, look, the S&P is down 16%. If you're only down 10%, that's wonderful. But if the S&P is down 16% and your portfolio is down 30%, it's like, what are you doing? So there's a lot of pressure to own Apple, and it is the most widely held stock in the world, second largest company by market cap, only recently getting that number one spot taken by Aramco. Aramco, the Saudi Arabia oil producer, they actually did become the most valuable company in the world, given what the price of oil has done. But nonetheless, I think this goes to show a lot, potentially, what could happen to the markets and what could happen to liquidity. There's some other things here. Pause the video and take a look if you guys want to dive deeper into this. But that's the most notable thing. Pretty damn interesting, to say the least. Now let's talk about what is going on in the markets today. Let's talk about what's happening to AMC stock. It's pretty much a flat day, only down about 0.25%. Now we still have about 40 minutes left of trading, so obviously with these end of the day moves, wouldn't surprise me if AMC is up or down a couple percentage points. But for the sake of this video, I think it's good timing to actually go ahead and make this video. So we had some good and bad news today, like we covered in the last video. The good news is that China is starting to ease their restrictions. So that is good. That is what is helping the price of oil go up, and that is what is kind of helping the S&P and the Dow Jones Industrial Average as of today. Definitely oil being up is giving the markets a pretty substantial boost. Natural gas up about 4.20%, hashtag 420, hashtag just playing. Brent crude up about 2%, oil up about 2.76%. So it's definitely helping out there, and that is seen as just an overall good thing for concerns about inflation, supply chains, so on and so forth. At the same time, China's retail sales came in very bad. About 11% decline year over year, 6 percentage points worse than what we had initially expected. So that was obviously not good, and that's extra not good today because we have our US retail sales month over month coming tomorrow morning at 7:30 a.m. in the morning. So it's definitely putting a little bit of a bitter taste in a lot of people's mouths. A lot of retail consumer kind of stocks are down today, which does not surprise me. That could be important tomorrow, but the biggest thing is going to be Fed Jerome Powell. We talked about this in the last video. He has some kind of interview, I believe, with Bloomberg at about 10 a.m. And depending on what he says, those headlines are definitely going to drive the market. So that is going to be of the utmost importance. And then other than that, all we really have to go off of as far as potential news catalysts is going to be these 13F filings. And like we went over in the last video, 2 videos ago, go ahead and watch that. We went over the 13F filings, the fact that Bridgewater and Ray Dalio bought AMC stock for the first time ever in history, and the Swiss central bank is buying like hundreds of thousands more shares in AMC stock. I think it goes to show the valuation is at very attractive levels right here and right now. So that is basically that. That's the rundown. Now let's dive into specific AMC data, like the interesting flow sentiment. So we do see 12 orders totaling $3.4 million, positive order value of 75%. Lots of calls coming through specifically for May 27th. You can see the 1550 call is being targeted quite aggressively, as well as May 27th, 1250 calls also being targeted very aggressively. You can see a June 17th, $6 put. You can see a December 16th, $14 call. All of these getting a lot of option activity, but by and large, the dollars that are heading into AMC stock, about 75% of them are bullish on the day. Now, the short interest of free float is 21.68%. Current shares that are sold short of 111.74 million. Cost bar max of 4.33%. Utilization of 100%, and days to cover is sitting at 3.13. So the situation here looking very good. And again, I do want to remind you guys, if you have not watched any of my videos in a while, that I do think the short interest is actually much higher and can lead to an even bigger rally based off of all of the puts that we still have on the option chain. If we go ahead and look at the Stonko tracker data, you have almost 1,000 puts that are currently in the money, 68,500 puts that are out of the money. So what has essentially happened is the market makers, they have to short a lot of stocks, about 10 million shares, to essentially oblige for these in the money puts, and that adds a lot of short interest to AMC stock, but it's not reported to Ortex. It's not reported in the same way as, say, the short interest of free float. But when the price of the stock does inevitably go up, it works the same way as shorts covering. Market makers go out and rebuy the stock because, hey, the puts are not in the money. They don't have to deliver shares at XYZ price. They can de-hedge that position. And that's what could fuel a major rally if something like Fed Jerome Powell tomorrow is bullish or neutral, or, you know, if anything happens really. Now, there's also potentially, you know, some negative things that could come, like Sweden and Finland are applying to join NATO, and Russia does not like that. It would double the border of NATO right on Russia. So if there is any kind of retaliation, airstrike, something in Finland, which would be a stupid idea because during the Winter War, when Finland and Russia went to blows, Finland absolutely destroyed Russia, like destroyed them. So that would be a very bad way of doing business. Let's just call it that. But that would definitely freak out the markets. That would give you the whole World War II World War III vibes again, and that would not be good. So that's something I would watch for, as well as crypto remains to be very, very shaky. Everything is pretty much down over the last 24 hours, unless you're in these more small cap speculative coins. Some of those are up thousands of percents over the last couple of days. But nonetheless, if you do see more weird action in crypto, more rug pulls, things like that in crypto, it's gonna hurt the overall markets, and I think that goes without saying. So that is pretty much going to be all for this video. Fear and Greed Index. Let's go ahead and take a look at exactly what is going on here, and it says we are at a 12, so we are still in extreme fear territory. 1 week ago we were at a 10, so slightly better, but last month we were at 41. Last year we were at 35. So you're definitely still historically low on the Fear and Greed Index, and there is still a lot of fear out there. So you know, just expect this volatility to continue for quite a long time into the future. So that is pretty much going to be all for this video. Key technical levels, like I said, watch $10 to the downside, $15 to the upside, and then the 50 and 100-day moving averages. MACD, RSI, extremely bearish, looking for a move back up to the upside. We're definitely overdue for a substantial bounce back to around $15 per share. Max Pain is sitting at about $16 per share by the end of this week, so that would put us right up to about this 50-day moving average. My price target is in between about 15 and 1861. I think we'll end somewhere under these 50 and 100-day moving averages, but I think we will come up and retest those levels, but I think we will close overall above 15. So that is pretty much going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns. If you guys want to come trade with me live in real time, link down below in the pinned comment, and go get yourself those free stocks with Webull, Moomoo, and Public. Thank you guys for watching, and I will see you in the next one.